Alright, welcome to this lesson on tri-star pattern. And basically, what is a tri-star pattern? Now, it looks something like this. Basically, instead of one doji, right now you have three dojis. So when you see three dojis, what does it mean? So the one point you need to take note of is that it has to appear consecutively. If there's another hammer pattern in the middle, like for example over here, if there's a hammer then followed by two dojis, then it is not considered. Okay, it has to appear consecutively. So price is going to reverse. So if you see this in a downtrend, then it's going to reverse in an uptrend, and you see this at the end of an uptrend, price is going to reverse on a downtrend. But just bear in mind that tri-star pattern, just like doji, it is a neutral pattern. So whether it is bullish or bearish, it depends on the context. Okay, and it's not very commonly seen, but if you do see it, then it means that traders are in a major decision, and it is pretty significant if you do see it. Now, tri-star pattern works better in a trending market, because in a ranging market it wouldn't work that well. Okay, now the thing about tri-star pattern is that it is really uncommon, and sometimes they might appear as a pattern similar to spinning tops. Basically, if you see over here, you see a couple of candles with really small bodies, and also with upper wick and also lower wick, and it tells you major indecision. Since spinning top and doji tells you the same thing, which means that it is a neutral signal, so it is very significant if you see it consecutively, especially at a support level. Okay, so in this case, price came down and then test this 200 as well as 100 SMA. In fact, it kind of bounced off 100 SMA more than 200, and price ranges a little bit before a bullish confirmation that tells you that okay, price is going to bounce up from here after the consecutive indecision. So it's very important for you to wait for confirmation that the price is going to bounce up, because like I said, dojis, consecutive dojis and consecutive spinning tops, it is a neutral signal. So if you see a bullish candle after this, then it is a bullish signal. Okay, so you can see we have a little bit of range over here, and then followed by a short-term downtrend. And then you can also see that over here at this portion, there are a couple of indecision candles. Okay, and you would know that this would be a false breakout above the moving average, because your 200 is still above 100, and then your 50 is still below 200. Okay, and also you realize that when the indecision candles are formed, CCI also went to overbought. So these are some of the ways that you can tell that the signals are false. So just like doji and then spinning top, you can also use it to spot a reversal and also a false signal. Okay, so let me give you another example. There wouldn't be a lot of examples in this lesson because, like I said, tri-star pattern, it is not very common and it happens once in a blue moon. So you can see over here we have a major downtrend, and where's the tri-star pattern? You can see over here. Okay, and it is formed on an oversold level, so there's a little bit of support over here. So you can anticipate that after this tri-star pattern, the price is going to retrace a little bit. Okay, and maybe test this 100 SMA before it comes down. So the thing about tri-star pattern is that it wouldn't tell you whether the retracement will it cause the end of the trend, just like this one, or will it cause a temporary retracement. Okay, it wouldn't tell you that. That's why you need a lot more confirmation. And I think it's very important for you to use tri-star pattern along with other confirmation indicators. A lot of people, they just like to look at candlestick patterns and they don't use it with other confirmation indicators. Okay, so the thing is, example, you see a tri-star pattern over here. Would you sell after the appearance of this tri-star pattern? Would you continue to sell? Now, if you look at the context, which is very important, okay, the price is sitting on a support, okay, and also at the same time, your stochastics, it is sloping upwards. Okay, and price came down here only to test the support, and then form tri-star pattern. So what do you think the price is going to do? High chance the price is going to retrace from here and then go up. Okay, so a very good trade would be if the tri-star pattern forms at a resistance. For example, it tests 100 SMA, and then before that the price came up here, right? And then you have a confirmation of a red candle after that, right? And stochastics RSI or any momentum indicator is giving you an overbought signal at the same time. Then this is a good place to sell. Okay, then you can ride along with the trend. This is what I mean by a good trade. Okay, would you want to buy here? I wouldn't do that because you are trading against the trend. Okay, this is a sell trend. Your 50 is below 100, 100 is below 200. Of course, sometimes it interchanges, 100 below 50, but then overall it's still a bearish trend, so you wouldn't want to make a buy trade. Okay, it will be pretty dangerous unless you're trying to pick tops and bottoms, and which in this case there's not really a very clear clue that the downtrend is going to end, so you wouldn't want to make a buy over here. And some more, just understand that a tri-star pattern would be more effective if it is found at the end of the trend as compared to if it appears at a very random area or random place. Okay, context is the most important thing. Alright, so with that, I'll talk to you in the next lesson. Bye.